Looking to the main markets, all sectors were just moderately down. Communication, services and consumer discretionary were the worst. Energy and utilities were the best performing sectors. We can see that overall the market didn't look too bad, but tech did suffer a little. If you're in the main markets, it's vitally important to keep an eye on Bitcoin. Bitcoin is incredibly risk sensitive. If there's any risk on move, you're going to see it in Bitcoin. And if there's a risk off move, you're going to see that too. We can see that the VIX has been spiking recently. And look what has happened to Bitcoin. It's just been melting down. We can see junk bonds not performing too well. This is reflecting in the major indices. Unfortunately, we can see oil starting to recuperate. That's really bad for inflation. And we've seen yields and the DXY spike up, which has placed enormous pressure on gold. Also, bond prices are coming down. These particular bands are called SCs or Stanfield zones. They're formed through the CTKS method. When we mark up a chart through the CTKS method, we're marking up all of price history. This is the S&P 500 since 1871. What stands out very, very clearly is this problem here. We had a very, very strong band of support as price was above it, between 44.10 and 44.41. Unfortunately, we've dropped through that band. We were caught by smart money safety nets below, but this is not good. We could come up for a retest. If we don't get above 44.41, the S&P is in trouble. SCs are used to put together SLs, a confluence of them, and when we pop on the indicator, we can see that there are different styles of levels underneath these SCs. They're all significant. It's like reading an EEG chart. Kate and I appreciate you being here. We're so grateful to share this time together. And the past episodes that we've done, 987, 986, and many of the other ones, are really there to prep you. The markets are getting very volatile, and there are specific ways that you can cope better with that. Also, thank you very much for all of your comments. Mayan Miss said, being brave and keeping an eye on the Tier 1 and Tier 2 charts is a must in navigating the treacherous seas of trading. Ken is teaching us how to read the weather. Heads up, storms ahead. There definitely is, and thank you my friend for that very kind comment, there definitely is the potential of storms ahead. I'll explain that a little bit more. What we need to understand is CTKS structure overrides. That means if there's strong support inside a particular chart or asset class, that means that will be less hit in the event of a sell down. I'm going to show you the NASDAQ marked up since 1973 with the CTKS method, and I'm going to put those SCs across price action. Reading a zone on the CTKS method does take training, but we can see, and especially the people that have the indicator, can see that this particular area from 13.563 to 13.631 was very, very important. The fact that we lost that area was significant. We can see that we tried to retest and get above it. We failed. If it's not going above, it's going below. If it's not going above, it's going below. If it's not going above, you get the idea. But the concept is that not all supports and not all resistances are created equal. Between 13.189 and 13.273, and we're just literally just above that area. That is a very, very strong structural area inside the NASDAQ. We must hold that area. Please let me know in the comments, do you think the NASDAQ is going to push up from here, the S&P 500 push up, or more negative downside momentum? We know we control the trade or investment, but the market controls the return. We can only move with the market. We can stack probabilities and say there's a greater percentage probability that the markets will go down, but the markets will go any way they want to. They simply move SL to SL, Stanfield level to Stanfield level, or SZ to SZ. That's exactly why we do our daily three-dimensional risk management. We look at the market and what it's doing. We predict what the market could be doing tomorrow in the next 24 hours based on our time zone and what we're looking at. Of course, if you're looking at commodities, that will be very different than if you're looking at stocks. And if you're looking at crypto, well, that's different from looking at bonds. So what you actually put in here is unique to yourself. You cannot compare different people's CTKS codes. So the truth is, there is no right or wrong code in respect to people putting in their CTKS codes in the comments. That's very important to understand. The next part of the code is to think about what your portfolio will do if this happens. For example, what we're saying here, the market was neutral today. This is what we're saying in this example. But the concept is the market was down today, especially in crypto. So it was down. A lot of people will say, okay, it's just going to follow through and it will be down tomorrow. Maybe, perhaps, perhaps not. As I mentioned in yesterday's video, success inside financial markets is counterintuitive. This is often the reason why people are not synchronized. They're just applying common sense, and common sense doesn't work in financial markets. Please let me know in the comments, are you feeling desynchronized because you're applying common sense? You're reading the news, you're looking at everything and saying, hang on a second, the market just went the other way. Common sense would dictate it would go down instead of going up. This is a really good window into why you may be getting desynchronized. And why is synchronization important? Because, as we know, the market pays you when you're synchronized, and you pay the market when you are desynchronized. So it's really important to get synchronized. If you're new to our global family, a very warm welcome. And you've probably heard, if you're a member of our global family for any period of time, you would have heard me say all markets and therefore charts are intercorrelated and interdependent. One reason that people get out of synchronization is that they're not really sure how different charts impact each other. Charts represent markets, and here we can see the S&P 500. The lines represent the crypto market. You can see the directional correlation is undeniable. Crypto and the stock market are moving in sync with one another. They're reflecting their movements from a directional basis. Having lectured in first and second year statistics, the actual calculation of correlation is actually very different. That's why you need to use directional correlation. If you're a member of the CTKS method monthly service, you would have known that the US 10-year is currently the wrecking ball across financial markets. With the spike in the US 10-year yields, it's caused absolute mayhem everywhere. It's caused a spike in the VIX and a spike in the MOVE, a spike in so many things. It's a big, big problem. That has filtered through to a decay in crypto sentiment, a decay in stock sentiment, and we can see Bitcoin and total crypto market cap pulling back, the S&P 500 pulling back. Bond and debt sentiment is not too bad at the moment. The markets are currently weak, and one thing to bear in mind, if we start to get a big offshoot in crypto sentiment, that is, that people turn really fearful, we could see some abrupt negative price action. In the video yesterday, I showed you how you can profit from negative price action. The key, therefore, is to be prepared and not scared. Make sure you have the knowledge and know what you're doing. As all charts are intercorrelated and interdependent, it's important to understand the Apple being underneath support here, and this smart money support area, once support when price was above, now resistance because price is below, is a very, very powerful support now resistance zone between 178.16 and 183.50. There are other support zones, and these are structural zones. This is not recent indicative price. This is Apple being marked up since 1980. The next area that we need to look at is between 162 and around 166. If Apple breaks below this area, it's going to be hell inside the markets. The crypto market has just turned green, literally. Looking at crypto news across the past just hour, we can see Bitcoin price prediction as Tether discontinues USDT support. That's a pretty negative news article. What about this? Binance Connect goes dark. Prime Trust is bust. Wow, that's pretty negative as well. Crypto loses 5.5% of total market cap as turmoil drives Bitcoin. That's pretty negative as well. Algo faces tough time. Records new all-time low as crypto market plunges. This is in the last hour. Remember, the markets are green. What you will see is the news just reflects the overall market sentiment. When the market came down, what are they going to do? Well, they're probably going to write articles that express and explain why the market went down. Crypto grants foster innovation amid venture capital exodus. Well, that's relatively positive. Ooh, 101, essential things you need to know. Argentinian presidential candidate supports Bitcoin. Wow, that's pretty cool. WorldCoin uses silver orbs to scan people's eyeballs. No thank you. What you will find is many people look to the news to try to figure out why did this happen or why did that happen. The truth is, price is just moving in a wave. What about the next page? Does that explain why crypto has gone green? Tier 1 banks with dedicated IBANs for crypto businesses. Well, that sounds pretty interesting. That's not really saying much. What about this? Oh, Bitcoin's problems may be bond yields. Maybe bond yields? They're of course bond yields. But Ken, what about this and this and this? Of course, that's part of it, but primarily the problem inside the markets right now are that bond yields are going absolutely nuts, especially the US 10-year yield. It's wrecking the markets, and that's pulling up the DXY. Also, it doesn't help that the VIX has been very, very suppressed and is now increasing. This is why we must look at the main markets. What about anything else? Oh no, it's all pretty negative stuff. You will find that when it comes to news, the news is trying to explain what happened. It doesn't know why it happened, but that doesn't stop news outlets trying to explain it. For example, why is Doge up 4.7%? SHIB nearly 7% up. Litecoin a staggering 0.31% up. Bitcoin Cash 4.18% up. You can see there's always some area of green inside the market. And don't forget, we had a flash crash yesterday. What actually explains it is CTKS structure. I'll take you through it. Thank you very much to Jay, who had just an amazing comment out of yesterday's video. Jay said, the last few videos prepared me for what was coming in a healthy retest. I saw the 2-year federal funds rate going up, as well as the 5, 10 and 20-year yield peaking at recent 2022 highs. Crypto was in for a correction. My best trade was OG, 92% in less than 48 hours. Wow, good on you, Jay, that's awesome. My personal record by being on the 1-minute charts, thanks to L1, Level 1 and Level 2 certification. Thank you, my friend. I traded Litecoin, Bitcoin Cash, Ethereum, XRP, Unfi, Rune, C98, and Ape, and have been making big profits lately, and reinvesting my profits and scaling in as I learned in the masterclass. Thank you, Ken. You taught me skills for life. Many buy orders are waiting patiently to be filled, as I know the universe wants me to succeed. Jay, that's absolutely awesome. Congratulations. And congratulations to everybody who's succeeding during these challenging times. And if you're not succeeding now, just take heart. You will succeed when you get the knowledge. A lot of people, when they get into financial markets, they try and drive a car from the passenger seat. It just doesn't work. You've got to get behind the wheel. Previously, I said, the news is being driven by CTKS structure. What the heck does that mean? The CTKS method invented objective dynamic market structure to help people to understand where the true support and true resistance levels are inside the market. You might have noticed that I use levels. There's more than one level. When people first start inside financial markets, they think there is one level of support and one level of resistance. This is not true. In yesterday's video, we were around this particular price action. And what I mentioned here was that we were looking a little bit weak. We may come down. This is total crypto market cap marked up since 2014. We could come down to this area around the $1.019 trillion mark because this is where CTKS structure actually is. You'll notice that the entire, well, not the entire, but basically most of the crypto market is starting to turn green. Why is that? Because total crypto market cap found support and bounced. That's exactly why things go green and why they go red. Why did the markets go red in the past trading session? Because they broke below this total crypto market cap. Smart money once buy area turned to resistance at 1.062 trillion. And you note it was caught down here at that $1.019 trillion mark. It did go further down, absolutely, but this acts as a very strong safety net to rebound price action. What is underneath these SZs? Well, it's objective dynamic market structure or CTKS structure. And if you have the indicator, you can see the exact strength of these lines. Many thanks to Claudia, who left a fantastic message on Twitter. Claudia was just referring to this particular price action where I leaned in the last video to show that it doesn't matter if price is going double-digit negative. You can make a lot of profit from that. Claudia said something that I really wanted to share with you. She said, "I'm happy to experience this volatile crypto market and learn that there are really no bad trade days." Wow! Yeah, Claudia, that's fantastic. And it's true, there are none. Profits are made when you buy. If you buy correctly, you're going to make profit no matter what. As it's the weekend, the main markets are closed, and thank goodness for that. Everybody can take a bit of a pause. One thing that we want to answer the question, where are we going to next? Price is a very, very simple animal. It moves from SC to SC, from SC to SC. How do we know if it's going either up or down? It's very, very simple. If it's not going below, it's going up to the next one. So far, we have a positive indication that we could be going up to the 1.063 trillion. What happens if we come down here? Well, you have to pay attention to it, because if we get around this level and we start to resume down, we're going down to the $976 billion mark. It's very easy to understand price behavior when you just look at it. Price is moving just SL to SL, Stanfield level to Stanfield level, and you get these levels through the indicators. And if you would like the indicators, just pop across to ctksmethod.org. In yesterday's video, I talked about the role of common sense inside financial markets. I explained in the real world, a stoplight is red, that means stop. A green light is green, that means go. But in financial markets, they mean the opposite thing. One means caution, the other means go for it. What I mentioned in yesterday's video, Zone 1 and Zone 2, is based on common sense. And that's why people lose money inside financial markets. Instead, inside Zone 3 and Zone 4, we think from a counterintuitive, non-common sense perspective. And if you think 90% plus of people lose money, wipe out their accounts inside financial markets, it doesn't matter which one. It just is all of them. People who have been inside financial markets for decades know that this is an absolute truth. It doesn't matter what market you go to. If you're using common sense, you will blow up your account. Blow up in the bad way, not the good way. Why am I talking about common sense? Because I said price moves SL to SL or SL to SZ to SZ. The concept is, inside Zone 1 and Zone 2, people want a definitive, absolute answer. What caused this price action? You must give me an answer, and it must be the one that I agree with. There are millions and millions of participants inside financial markets, tens of millions of them. Each person has a reason, and it could be very different from the reason of the other people. The light switch concept not only applies to going all in or all out, or running into the market or running away from the market when it goes red. It also applies to price predictions. People get in their mind, it must be a certain thing. It's not like that. You just look at the structure and you deal with whatever price is interrelating and interacting with that structure. And the structure occurs over many, many different charts. Counterintuitive thinking lives in Zone 3 and Zone 4. We don't need a definite price prediction. We know the price is always moving in a wave. It's going down in an uptrend and going up in a downtrend. We know that the news is simply reactive. The news guesses. But the charts tell you the truth. Therefore, we stack probabilities. We are like dimmers. We come on slowly and go off slowly. We have so many different rules, and we focus on mastering fear. When you're in a capitulation and the whole entire market is going double-digit negative, there's a lot of people that would say, hey, I'm out of here. This is just horrible. I'm running. And that's exactly why it goes double-digit red. People are abandoning ship. Inside Zone 3 and Zone 4, we actually lean into that negative price momentum. We're like firefighters. We have all the protective gear on. Thank you, Roland, for your comment in yesterday's video. Roland said, I indulged in that big long red candle, but I got about halfway up. Now sitting on a couple of percentage down. Now I'm just waiting for some reflection in price. When we look at Bitcoin marked up with the CTKS method since 2009, I'm going to put on the SCs in a minute, but the concept was we were around this particular price path in yesterday's video, and we saw price actually come down after that. But how could smart money levels actually help us out here? After all, that's why the method was invented. The rules of price are very, very clear when it comes to the CTKS method. It just gets rid of so much stress and anxiety. If it's not going above, where's it going? It's going below. So here, did it get above? Did it get above here? No. Did it get above here? No. Where's it most likely going if it can't get above? It's going to here. If it can't get above here, where's it going? It's going to here. If it can't get above here, you can see the reflection. You can see how price is always ping-ponging between SLs. SLs, Stanfield levels, these bands are zones and they just accumulate SLs. We can see that we've now been rejected from that. If we can't get above, where are we going? You got it. We're going to 25,753. If we can't get above that, we're going down to the next one. If we can get above 26,292, we're going to the next one, 26,565. It's very counterintuitive to move in alignment with price like this. Everybody wants to say, I can definitely tell you where it's going. It's going here. It's not quite like that. When it comes to price, especially in crypto land, is incredibly volatile. The beautiful thing is that you can mark up the CTKS method on any chart because you can learn how to do it. There's 2 levels of certification, and it's very, very valuable to know where things are turning around, where they're weakening, where they might reflect, where they might find resistance to buy and to sell. Wow, that's a superpower. Solana is a bit of a community favorite, and Still Blue Brick said trading Solana and bought the dip. Well done, my friend. When we look at the SZs, which basically just encapsulate the SLs, this is what we looked at yesterday. I always say these SLs are used to predict future price. So what happened with future price? Let's have a look. Let's just look as we go forward, and I'll extend these bands, but I want to give you a bit of an understanding as to how you can actually use them. Okay, I'll extend now. There you go, there's an extension. What do we see? If we're not getting above, where are we going? We're going below. This is why knowing your SLs and especially being able to mark up charts with the CTKS method, it's an absolute game changer. It's also a stressless trading style and a stressless investing style as well. One thing that you can see, if you cannot get above, what's the answer? You're going below. How much more certain can you get from that knowledge? Can you imagine if you were in Solana, you bought around here and then you saw price start to decay and start to capitulate? Oh, their favorite word, capitulation. We love capitulation. It's the time to get on the right side of the percentage. If you didn't know where smart money was buying, you would just get freaked out and you would sell. And what happens? You see it rebounding and you say, oh no, I should have bought. Hang on a second, I'm getting in. And then you see the price come down again. If you don't know where the structural levels are, you'll die a death of 1,000 cuts financially. Look at the difference when you understand where the structure is. This is structure. This is not recent indicative price. This is Solana marked up since 2020. Not just the past week, the past month, the past year, all of it. I hope this explains a little more that structure actually is responsible for moving these prices. It overrides just about anything. Of course, news stories are incredibly important. You should always keep your eyes on the news. But just understand, by the time prices rallied, a lot of people are getting on the bandwagon and saying, this thing is going to go to moon. And what happens? It doesn't go to the moon at all. It goes somewhere else. And we saw that in Bitcoin Cash and Litecoin as well. It's very easy to get sucked into narratives. That's why we go independent of the market. We can see that in the past 24 hours, things have calmed down a little bit for Bitcoin. And that's good because as Bitcoin goes, so too does the entire crypto market. But however, when we look at the last 7 days, this is an ugly chart. Does it mean, and looking at the last 30 days, it gets even more ugly? Does this mean the sell-off is over? Perhaps, perhaps not. When we look at the major indices, we can see that the S&P 500 is below structural support. It could come and retest it, but it's not looking good. What about the Nasdaq? The Nasdaq bounced from structural support and it's trying to just eke its way above it. That could be really good, especially the tech sector. Common sense would say, just give me one answer, Ken. Is it going up or down? Financial markets are very, very complex. They can't rely on simple answers. You can only stack probabilities. And stacking probabilities is what we're not taught how to do. If you're here inside this market, you're obviously incredibly intelligent. The concept behind people being in financial markets, they're smart. They're some of the smartest people that you'll ever find. And this is why it can be so difficult, because the rules and the structure that we understand out in the real world are broken inside financial markets. We have to learn a completely different structure. What typically happens when Bitcoin sells down, the alts absolutely bleed. That also means that they rebound as Bitcoin goes up. The gravity works in both directions. If Bitcoin is bleeding, the alts will severely bleed. And if Bitcoin rebounds, the alts will severely rebound. That's what you're seeing here. That's what actually causes price movement. There are always opportunities inside every single market. It doesn't matter. And we can see the greatest gainers in the top 100. We've got a new entry. AKT, wow, fantastic. Followed by Injective, Optimism, SHIB, Rune, GMX, FracShare, Comp, and DYDX. The greatest losers, top 100, past 24 hours. Conflux, TON, SEI, Gate Token, Mantle, HT, Rocket Pool, Bitcoin, and Wrapped Bitcoin. That Bitcoin is really wrapped. Liquidations across the past 24 hours, they've come down a lot. They were in excess of $1 billion yesterday. Current 24-hour liquidations, 148.75 million, with 95 million being long. And when we pop through all the different areas, ooh, look at that, the past 4 hours, as Bitcoin came down to structural support and bounced. Interesting. And Total has been doing the same thing. Surprise, surprise. They tend to move together and they both influence each other. And we can see a lot of short liquidations inside YGG. YGG. Not surprisingly, the Crypto Fear and Greed Index has plummeted. And when it gets down to values like 10, wow, the best buying opportunities ever. It's important to understand how Bitcoin's gravitational pulls will pull the alts down. It will overextend the pull down. Why is this the case? Why doesn't Bitcoin come down as much as the alts? Please let me know the answer to that question in the comments. It's a very important thing to understand. And you might say, Ken, why are you asking us to answer a question? Shouldn't you be giving us the answers? I will definitely do so tomorrow. But what we know is active learning actually makes the difference. When you actively think about things inside you change. You actually pay a lot of attention. I always focus on understanding, because if you understand something, then you can apply it without remembering it, because, hey, you understand it. Let's have a look at Ethereum. Has it escaped Bitcoin's gravitational pull? No. It got obliterated to the downside and then it's recovered. This is what we expect to see. Like XRP, we expect to see this. Doge, we expect to see it. ADA, we expect it. Solana is looking a little bit weaker. Tron, yeah, not so good. But BNB, not looking good. From a directional gravitational stance, we want to track strength. Why do we want to track strength? Because if an alt is going to bleed, you don't want to be part of that when it's bleeding. You want it to bleed up, not bleed down. Can an alt bleed up? Let me know in the comments. Each day we do positive affirmations to remain inside Zone 3 and Zone 4. We don't want to go back to Zone 1 and Zone 2. Anybody can go back at any time. We don't want to do that. There's nothing but pain and agony inside those zones. That's why we have the CTKS Creed. These are daily positive affirmations for abundance, financial success, and happiness. Let's go through it. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Buy on red, sell on green. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame, and I always solve my problems with positive excellence. If you like the content, please like and subscribe to our global family. We'd love to have you here. And if there are any topics that you would like Kate and I to cover off for you, please leave a comment in the comments section on YouTube. That will help us to be of more value to you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.